Yo, what is going on, y'all? Jay Trades here, back in a brand new video. And in today's video, I'll be going over why you should not be spending your whole entire day looking at the charts. And so let's get straight into it. So first off, this does depend whether you trade stocks or Forex, because the stock market, as you guys may know, opens from 9:30 to 4 p.m. And the Forex market, it's basically open 24/5 and open on Sunday at certain times. So it does depend, again, time zones and all that. But my point is, for Forex, at least, you want to focus on 1 or 2 sessions max. I would highly recommend just focusing on 1 session. And if you're trading stocks, of course, that's a whole different story that you could technically trade throughout the whole day. But let me explain why you should trade certain time frames and time ranges rather than a full session. All right. So let me get straight into this real quick. So let me show you guys something as to why I don't recommend, despite, yes, you do need screen time, but I think quality of screen time matters a lot more than how much screen time you get. And this is a big mistake that I made when I was starting up, because man, you don't know, guys, don't understand how much time I spent on the charts. The whole entire day sitting at the computer, looking at charts like all of you guys, straight up sitting at the computer all day. And I was just not finding myself being productive, honestly. It wasn't a waste of time. I did learn a lot from, screen time, seeing price action, but it wasn't the right price action. So let me explain this real quick concept to you guys. So, alright, so I just turned on my time zones for my Forex pairs and currencies and commodities. So here you guys can see London, Tokyo, New York, all split up in 3. I don't ever have Sydney session open just because that one's just dead. But anyway, if you guys do trade that, that's completely up to you, completely fine, depending on your market. Of course, it all depends on your time zone. But nonetheless, let me just show you guys something real quick. Alright, so here's what I mean by why I think you should focus on a time range rather than a session in particular, because you guys can see how this time range matters so much more than just the session itself. Because this right here is New York, all right? From 8 o'clock to, I believe this goes till 4 or 5. Yeah, 5 o'clock. That is New York session, but as you can see, look at the volume down here. There's a major spike in volume during the first 4 hours of the New York session. After that, volume dies down really, really low. During this time, your fills are not going to be the best. Obviously, way better than trading Asian session over here, but fills are still not the best, and price moves so slow, it's not even worth your time trading. And let me show you why. Because let's say you're looking at price action over here, right? Let's say you have these zones drawn out, which I do have. These are my zones that I like to trade throughout and use. Let's say you're looking at these big zones, right? They're not going to work that well during a certain time frame or time range, right? Let's say, look, you're looking at Tokyo. Look, right here, this rejection right here, it never hit the time frame or never hit the zone. There's certain things like that, but let me explain one thing real quick. So right here, as you can see how much price moves, volatility is so much. This is 0.47%, this is 0.59%, 110 pips. And look at how less price moves during even the same session. Let's look how less price moves, which means your sizing and everything is going to be completely off. The size that you put on a trade has to be a lot more to make the same profit amounts, meaning your P&L that you see is going to be way different. In my opinion, I think you should certainly hide your P&L while you're trading, but that's just me though. But yeah, everything's just going to be completely different and off, as well as timing, right? Let's look at one of these moves real quick. This move from here, this zone to this zone, took about, 10, 20, about 25 minutes. This move right here, after basically the 4-hour high volatility period, took about 4 hours to make, 4 to 5 hours. So a huge difference in how long you hold your trades. This is going to confuse your brain because you're so used to catching these fast, big moves that when you see this it's not actually consolidation, but when you do see this slow price action, you're going to get so confused and you think something's wrong with the trade. In reality, there's nothing wrong, right? So price action is completely different during different session time frames. Again, let's see this one right here. You guys can see if you were trading after 12 o'clock EST for New York session, you've been trading in all of this mess right here where it just goes up, down, up, down, up, down. Super, super choppy right here in this frame, especially this is basically consolidation for what? 3 hours. So if you're sitting here looking at the chart for 3 hours and all you see is this, you're not going to learn much. Now, what I did learn obviously is how price action moves during this time period. That's something I could really tell you right now to just not even look at and care. And you wouldn't have to spend that time that I spent. So This is just helping you guys out, man. Letting you guys know what I learned from all the time I spent, so you guys don't have to spend this time. Again, super choppy price action in this area. You can't even really trade this properly. You could scalp, but even then when you scalp, it's just not worth it at all. This risk reward ratio is so off on this area, and the long time you have to hold sitting here is just awful. So there's that. And then we can see other examples just about here. Let's see. This was pretty volatile day right here. Right here, as you guys can see, literally after 2 o'clock-ish, price barely even moves. Despite being New York session, supposedly the most volatile time period, price barely even moves. You're not going to catch a single thing here, and direction is not that clear. Sure, you can say it's going to the downside, but you have some really weird price action going on, and it's just not even worth holding for this time period, honestly. So that's what I think. Again, this doesn't apply to just New York session. This also applies to like Tokyo, London, same situation with those. Different time periods, different time ranges will have different price action going on. Again, you have to take into consideration what asset you're trading as well. It's also going to make a major effect. So again, see certain time or certain assets are a lot more volatile than others. So there's that. So there's a lot of things you have to take into consideration when you're trading it like this. So I do highly recommend you guys start looking at price action and combine that with time periods. I'm going to go over this whole thing of understanding this cycle in my courses later on. And just knowing time, money, and time price concepts is so key in your trading. That basically vastly improved my profitability in trading, because understanding what time you're trading at is so crucial in price action, because price moves way differently during what time. So hope you guys did enjoy today's quick video. If you guys did enjoy, make sure to leave a like down below. Again, link down below in the description to join the exclusive premium Discord. We are doing call outs every single day, making money down there. You guys don't want to miss it, so make sure to join that. Sign up for premium, and my course is coming very soon. So thank you guys for watching, and I'll see y'all in the next one. Peace.